So, hello everyone, and welcome to the European Fintech Conference 2024 in Madrid. It's really nice to have so many people here. My name is Adam. I'm the founder of Startup Network Europe. I have hosted 162 events in 3 years, and it's an honor to be here. And I know we have people online. Can I ask the people here in the audience, who here is a founder? Great. Who here is an investor? Great. Keep an eye on those people. And who here is a finance professional? Great. And who here is an IE student? And who is other? Excellent. Okay. Who is from Spain? And who is not from Spain? Okay. More people not from Spain. Really good. Well, I'm very happy to be here today. I really want to thank the speakers who will talk today. I want to thank Sebastian and Nikhita from IE Fintech Club, and they will introduce the conference for us now. Thank you so much.
Hi everyone, welcome to the IE Fintech Conference 2024. It is a pleasure to host you all here today. With over 800 fintech founders, investors and enthusiasts here, this event is not just a conference. It's a platform to connect people beyond borders. Whether you're joining us online or in person, you're in for an exciting evening today.
Thank you, Nikhita. So before we introduce our mediator for today's events, we would like first to take this opportunity to thank to everyone that made this event possible today. First, to all IE Business School and its entire organizational committee, the member of the Fintech Club, our partnership Startup Network Europe, who has done a fantastic job, our greatest sponsor, Zendesk and Remote, and of course, to the speakers who are joining us this afternoon, and we are very happy to be able to listen to their experience. Today's conference will be made by Adam Fulham, the founder of Startup Network Europe, and his team. So please put your hands together as welcome Adam Fulham again.
Yes, so we have our first panel moderated by Beatriz from Remote. So Beatriz, if you want to come. And yes, here we go. Welcome, Beatriz. And Beatriz, on your panel, if you'd like to say something about Remote first.
Okay, perfect. Well, first, hi everyone. I'm Beatriz Iborra from Remote. Remote is a platform to help you to hire everywhere and all the dislocalized people around the globe.
Thank you. And our panelists today will be Arturo, who is chair of the Spanish Fintech and Insurtech Association. Arturo, are you here? Yes, thank you. And Lorena Muller-Gomez, yes, from Asociación Española de Banca. And also joining online, we will have Bianca Zwart, who is Chief of Staff to the CEO at Bunk, which is a Dutch unicorn fintech. So the three panelists are very welcome. Great. Here we go. So guys, I will leave you to it. Thank you so much.
Can you? Yes, this is working. So perfect. So in this panel, you see that we have 3 amazing guests. First, we have Arturo. Arturo, if you take me right, you are the chair of the AEFI, the Spanish Fintech and Insurtech Association. So Arturo, would you mind to tell us a bit about yourself for the audience?
Sure. I've been working for a long time, since '89, in the intersection between financial services, technology, and innovation. First decade in large corporations such as IBM or Banco Santander, and since 2000 in smaller companies. In '94, I joined as a first employee Eurobits, the first account information service provider in Europe, long before the term fintech was coined, although we were a fintech back then. And I went through the whole life cycle. So I bought the company through an MBO when Bankia, the largest shareholder, went bankrupt. Then I found new investors. I went through the supervisory process because the service was originally not supervised. And ultimately, I sold the company to Tink, which is now part of Visa. And since I left the company in July 22, I kept the engagement in a number of institutions, one of them IFE, the Spanish Fintech Association, but I'm also a member of the EPC, European Payments Council, the ERPB, European Retail Payments Board, and vice chair of EDPPA, which is the trade association for TPPs in Europe. Yeah, I'm not bored.
No. So with this, with all this experience, the question that we have for you today is super easy for you to help us to understand. So I guess that collaboration between traditional financial institutions and fintech and insurtech startups is becoming increasingly common. So can you share some examples of successful partnership in Spain and how these have benefited both parts?
Okay, so I could probably pick and choose almost any of Eurobit's customers. So basically what you asked me is what I've been doing most of my life, most of my professional life at least. Not only traditional players, mostly banks, but also players that were not so traditional a few years ago, but it's been so long that they're almost like part of the family now, like Fintonic, who was a customer of Eurobit since 2012. But I would probably choose, I could choose for different reasons, many, but probably the first remarkable experience that we had at Eurobit was when we signed BBVA for a project called Tu Cuentas back in 2008, which was quite revolutionary at the time. And I think the term fintech hadn't been coined yet. It was a bit 2 years before the term was coined, but BBVA launched a PFM app called Tu Cuentas, which, for those of you that are not Spanish, it's playing with words, your accounts and you matter. And it was quite innovative. It was a project that was featured by Forrester Research as how the future of banking would look like, and they were spot on because that's how banking looks like today, to a large extent. And it was quite interesting to see how we could mutually engage being so different animals. So I remember that there was a press conference that was featured in all the news reels that day with the president of BBVA, Francisco Gonzalez, the then CEO, Gori Golzarri, and the CEO of another company which is called Strand, which was one of our partners. And 1 hour before the press conference, we were discussing the nitty-gritty details of the contract. And if we did not sign the contract, the press conference would have been cancelled, and the project would have been postponed. So it was quite interesting and remarkable, particularly from their side, that they were able to manage such a situation, because for us it was me making the decisions, but in the case of such a big animal as BBVA, it's a completely different story. But beyond my personal experience, let me tell you that that might have been a rarity then, but because when the fintech term was coined, we were basically fighting each other. So probably if this roundtable was 10 years ago, we wouldn't have been smiling so much at each other. So it was perceived as either fintech or banks would win. There were not enough space for both, but we've mutually learned that there's more to be gained by helping us. So I think fintech is probably the best thing that's happened to the traditional banking industry in a long time, because we've helped the traditional banking industry be better prepared for the real threat, which is big tech and not fintech. But that doesn't mean that there's some place where some fintechs are competing head-to-head with the banks. So we can see the connection. Yeah.
Thank you, Arturo. So our second guest is Lorena Muñoz Gomez. Lorena, you are the Digital and Banking Public Policy Advisor at Asociación Española de Banca, the professional association for banks operating in Spain. So can you also introduce a bit about yourself?
Okay, thank you very much, Beatriz. I think my introduction is not so amazing as Arturo's, because I've been working in the Spanish Banking Association, or I mean in the Banking Association for years, and I started in the mortgage field, but then in 2017, all the digital regulation boom started with the consultation of the European Commission, and then the FinTech plan, and so on. And I was designated to cover this area, and I just go deep dive into technologies and all the things that were changing the financial arena, the financial service arena, and I love my job because this is very passionate, and as Arturo said, it has been evolving since I started, and he was not at the IFE, but the former chairmans, and we had a very difficult relationship at the beginning, but we found a point of a common interest with what was the sandbox, the regulatory sandbox here in Spain, and from then to now, I think all the not our relation from the association, but also the financial field has changed a lot.
It's really interesting what you're saying, because you said two things that I really like to ask you about. Because due to your expertise, what will be some key trends or emerging technologies that you believe will shape the future of banking and finance in Spain? And it will be really interesting to know how is AEB preparing its member to embrace these changes?
So first to say that investing in technologies has been always in the DNA of banks, which are indeed technological companies. But it's true that during the recent years it has become more relevant because many reasons there is more competition in the market, because also the need to ensure that you have secure and reliable IT systems, 24 hours, 7 days a week. So it is really important to keep the pace with all the technological developments and the new participants in the market. But it's true that we have been using new technologies since years: cloud, APIs, artificial intelligence, data techniques, and there are others that have been explored as blockchains, with many projects underway. But I will highlight especially the use of artificial intelligence, which is, I think, is key. It's a key technology, or is a key trend for the development of the financial services now and in the future. And this is so because it has many potential use cases or opportunities for banks in the area of security, in the area of consumer experience or user experience, to provide more personalized services. And it's worth to mention also how it can improve the risk analysis, the credit risk analysis in case of our banks, because it can incorporate non-traditional variables that help to have models more accurate and help to financial inclusion. It is true that banks have been using artificial intelligence during years, but it will probably, because they had a lot of high-quality data, I would say. So, but with the new models of generative AI, probably this will increase in future. Also, if we talk about new technologies and innovation, we have to talk about the payments market, because this has been, I think, the most disrupted during these years, and especially with the emergence of DLT and the new forms of money, of crypto assets, stable coins, and CDCs. So I think this is a very important area in which banks need to keep the pace also with what is happening in the market, to be prepared for a more digital demand in the future, the new ecosystems, and also to compete with the new forms of money. And regarding your second question, how we are trying to help our banks. Okay, we help them especially in the regulatory arena and supervisory field, because it is true that if we talk about innovation in financial services, we can't help but to talk about regulation, because we are a very regulated sector. So in our case, we are trying to promote that the current framework is adapted to the needs of a market that needs to innovate in a secure way. I mentioned the sandbox, for example, but it's true that it is important to reshape the current framework to try to avoid those regulations that may harm innovation in the financial services. Also, to guarantee that the framework is technology neutral, that there are not measures that can hamper the use of a technology which can be key in the market, and also to assess every measure, the costs and benefits, because sometimes in Europe we love regulation, we love to regulate, but we don't pay attention to the effects compared with other jurisdictions, with entities from other jurisdictions. So we try to help them in this arena, but trying to promote an innovation in the market, a secure one, and all the changes that are needed for this.
Thanks, Lorena. I like that. To tell that we have to be prepared and to be open to new technologies. I think it's important, and regulation for sure. So our last guest is Bianca Seward, remotely online. Hi, Bianca.
Hi, everyone. It's great. Thank you for having me. Is the sound good?
Yeah, we can hear you perfectly, Bianca.
Amazing. Great. Would have been great to be there in person, but unfortunately I couldn't.
It's nice to have those hybrid events, because we also can promote remote life. So I like the idea.
Sure.
So Bianca, you are the chief of the staff of the CEO at Bank.
Yeah.
Launched in 2015. Bank is a fintech unicorn from the Netherlands and the first profitable EU neobank. So we would like to know a bit more about yourself, Bianca.
Yeah, so I'm chief of staff to the founder and CEO of Bank. We're the second largest neobank in Europe. And chief of staff is a role that originally comes from politics, but is gaining more traction in the tech sector these days. What it comes down to, you could basically see me as the co-pilot of the CEO. I support strategic decision-making. I remove roadblocks that stand in the way of our success, and I make sure that together we take Bank's vision globally.
Nice, thanks, Bianca. So the bank was founded in 2012, if I'm right, and its app was launching in 2015. Europe's regulatory landscape and market environment, fintech, has evolved a lot since then. So what advice would you give to fintech companies who are launching their product or service now in 2024?
Yeah, great question. Thank you for that. So to younger fintechs, my advice would be to run your own race. And let me take a step back to explain what I mean by that. So when we started Bank, we set out to show what a bank could be, and to show that you can actually have an amazing experience in line with your wants and needs. And to do so, we chose to remain independent during our early years, rather than chasing vanity metrics, if you will. So Ali, our founder and CEO, completely bootstrapped Bank for nearly a decade. So we had no external funding whatsoever. So now you may ask, why would you do that? So the answer is quite simple. We had a very simple conviction. We believed that if we build a product that people love, they'd happily pay for it, right? Like any other service outside the financial sector. So by being the first to introduce a subscription fee, we forced ourselves to stay focused on delivering value and to truly be a user-centric business. and we didn't let rapid growth of our peers distract us from that mission. And even though that hasn't always been an easy ride, our approach definitely paid off. So over the years, like I just said, we've grown out to become the second largest neobank in Europe. We raised the largest Series A investment ever raised by European Fintech, and we just closed our first full profitable year. So that's all very exciting, but we were able to achieve all of this because we stayed true to our own vision. We ran our own race. So running our own race is what brought us here, and that's a key takeaway I wanted to share with you today. But one thing I wanted to highlight that's also important to remember, that running your own race doesn't mean you shouldn't care about who is running next to you towards that same mission, right? Towards the same goals. So as an example, when we started, you said that we launched, we were founded in 2012 and we launched in 2015. So there's 3 years in between that, and that was because we were the first in 35 years to get a full European banking license, right? So innovation was very much needed. And by doing that, we showed that it was possible to actually start a bank. And while we were at it, we actually simplified the application process together with the regulator to pave the way for more fintechs to follow. And ever since, because it's been a while, lots of players have entered the market and are now showing consumers in Europe, but also all over the world, that they can have a far greater experience than they could possibly have at a traditional bank. So my advice would not be do exactly what we did. In fact, it's quite the opposite. I would say stay true to your mission, be committed to delivering real value to the end user, and run your own race, because this will ultimately bring more diversity to the sector, create more competition, and put the consumer back in the driver's seat, and that will ultimately benefit us all.
Thanks, Bianca. I guess that everyone took notes of your advice, so thank you.
I hope so. I hope it was useful.
And thank you, Arturo and Lorena, to share with us as well all your knowledge and experience. Any questions that you might have, they will be happy to answer later on the networking. And we'll leave you now with Jeremy from Zendesk. Thank you.
Okay, well, that was the first panel. Thank you so much. And next up, we have Jeremy from Zendesk. He's a great moderator, trust me. So, Jeremy, if you'd like to say a couple of words about Zendesk.
I feel like you've really put me on the spot there by saying I'm a great moderator. Thank you, though. In the spotlight, yeah. I am in the spotlight, yeah. A little bit about Zendesk. Yes, for those of you who don't know who Zendesk are or what we are a global customer service software. We operate across the globe, 160,000 customers. We're nearly at 2 billion ARR and 5,500 staff. But I mean, the point of being at the Fintech Conference in Madrid, one of our, I guess you could call them our ICPs or the people that we really work well with are fintechs. In a highly regulated environment and maximizing customer interactions and getting those CSAT scores and getting those customers coming back to you is what we are all about. So yeah, we work with, I would say probably hundreds, more like thousands of fintechs across the globe. So yeah, we like to be in and amongst it, certainly, for these kind of things. So pleasure to be here, thank you. Oh, and if, this is my second time to Madrid, but I notice the European champions are playing tonight. So if anyone's got a spare ticket, more than happy to accompany you to the game later on.
Cheers, thank you. And now we have a panel of 5 people, and I believe that 3 of them are here in the audience, if you'd like to come up. So first of all, we have Benoit. Are you here? There you are. Co-founder of Payflow, which I think was part of Y Combinator. Then we have Iker from Fintonic and Open Insights. And Jaime from Hasti. Here you are, thank you. And of course, joining us online, this is a hybrid event, We have Maeva and Zara. So if we can put them up there, that would be fantastic. Thank you. And Jeremy, I'll leave the rest to you. Is it working?
I think so. Yes, we're good. Thank you so much for joining us in person and also online, if we could, yeah, once they've come up. But I think probably the first thing we should do is get you introductions and also a little bit about the business itself that you work in. So I guess, Benoit, you can kick us off.
Yeah, sure. Happy to do that. So I'm Benoit, I'm the co-founder of Payflow. So the business is basically a mobile app that allows people to get paid whenever they want. And we sell as an employee benefit in Latin America and Southern Europe, right? So the way it works is that basically you go and work every day, but you're only paid once, right? And this makes no sense. So we basically help people make it completely flexible. We also allow people to spend their salary in different ways. For instance, you could spend on food, on transport, on kindergarten, and all of that is deduced from your salary, and that's a more efficient way for you to get paid, right? The employee pays nothing, and the company pays for the service, a B2B SaaS fee. So this is Payflow.
Okay, thank you. Well, I'm Iker. I work. Well, I have two companies representing Fintonic and Open Insights. My background is mostly banking and consulting. I've been 10 years at the Fintonic group. Fintonic is one of the leading fintech startups in Spain with more than 500K active users in the market, with a focus on improving the financial well-being of the users and their access to credit through open banking, with two main lines of business. One is Fintonic, or what we call internally Fintonic Consumer, which is the consumer-facing app and platform, offering financial well-being tools and credit. And we also have Open Insights, which is a B2B company serving other companies or financial institutions in the ecosystems with open banking, data enrichment, credit scoring tools in order to help them and their users outside our ecosystem.
Hello, everybody. My name is Jaime Jimenez. I'm the CEO of Hasty. Hasty is a UK company. We were the pioneers in the UK bringing earned wage access, so on real-time access to earnings, which is a model that exists in the US for a long time. So we share space with Benoit and Payflow. We are offering employers the ability to attract and retain talent by giving them tools which enhance employee financial well-being, which is really a core focus area of HR departments, especially post-pandemic, when they realized that employees are humans that have personal problems, most of them financial related problems. Bear in mind that from the biggest, let's say, mental health situations that workers face, financial stress is the #1 cause of poor mental health, right? So it's very important that employers are helping their employees through solutions like Hasty, where we also offer financial education, financial coaching, AI assistant, savings, etc., everything around financial well-being.
And joining us online are Zara and Maeva. So Zara, if I could come to you, a quick introduction, please.
Hi, everyone. Unfortunately, I couldn't be there today, but I would have loved to. I'm Zara, co-founder and CEO at Levenue. Levenue is Europe's largest revenue-based financing marketplace. So we have a platform connecting SaaS businesses with non-dilutive capital, and they're able to do that by selling a portion of their future revenue streams. So subscription-based companies sign up to our platform and they connect their data sources, being their bank account, their subscription manager, and their accounting software. Based on their financial metrics, they're able to sell 30 to 45% of their future revenue streams, and investors on the marketplace bid to buy those annual future contracts at a discount.
Perfect, thank you so much. And last but not least, Maeva.
Hello. So yes, nice to be here, but not in Madrid. So I'm Maëva Courtois. I'm the co-founder and CEO of Helios. And Helios is a sustainable neobank dedicated to fighting global warming. So today we offer sustainable banking services to the retail market. And previously I worked in investment banking and asset management mainly, building ESG investment strategies. So I saw from the inside to what extent money is part of the problem of global warming and could actually be part of the solution. Because today our main source of CO2 emission as an individual is actually our bank accounts. And this is due to the investments that banks are doing in fossil fuel and other sector with our money that we don't know about. So we created Helios 4 years ago, it's 4 years ago, to dedicate money fighting global warming.
Perfect, thank you so much. So I think you'll agree that we've got quite the panel here to delve deep into growing and scaling a fintech business, but I want to get into the nitty gritty. So Benoit, let's come to you first. Payflow stands to disrupt traditional payroll systems. How do you see the future of payroll kind of evolving as we move into the future?
Yeah, sure. So I think I'll share 3 trends. One that is very close to us, the second a little bit less, and the last one not at all. The one that is very close to us is that people see salary differently, so they see a bit more than just money, right? So like if before everything was just basically a number, you have this new concept that is emotional salary that includes a bunch of other things that allow employee to choose one job versus the other, right? This is an effect of highly competitive job market, people switching more easily, like overall people staying less time in each company and so on and so forth, right? So that's a very clear trend. I think the second trend that is related to our business, but it is more of an enabler, is that overall there's been a massive movement towards API first and cloud-based basically payroll, which allows not only us, but any provider to basically plug into those providers and then provide more services, right? And this is quite interesting because this enables you to do more things with the same information, with the payroll data. So even have companies that have been created for that, which are basically the payroll APIs, right? And that basically allows you to do anything you want with all of the employees' salary, promotion, demotion, change, like understanding much better the rotation, and that's something that is really, really accelerating all of the HR services, right? And I think a third one is probably here we have our remote friends, and that's been pretty clear in the last couple of years for us, is that payroll has become global, right? So if before like you really had to go from one country to another, then right now you can really treat your market as the world, and that's obviously has been accelerated by COVID, has been accelerated by global hiring, and obviously companies that have been working to make that even more flexible. So these would be the 3 trends that govern payroll.
Yeah, interesting insights as we kind of grow those businesses, and part of those trends is more regulation and I guess a lot more data management as well. And that kind of brings me to you, Ika, because with increased access to customer data through open banking, how do fintech leaders ensure transparency, maintain trust, but also with those customers, how do you manage, particularly regarding data sharing around customer data?
Okay, thank you for the question. I mean, first of all, I'd love to explain a couple of use cases of open banking where we are using right now. We use open banking mainly for 2 things. First of all the credit that we are giving the users and helping banks, as I mentioned, with our credit scoring tools, where we aggregate the data for the banks and we generate a credit scoring for the user and the bank. This allows, for example, a bank to approve 26% more loan application with the same level of default risk. And this is a great use case for our open banking solutions. And we also have our financial health tools that are for the users, and this data is used also for market research as alternative data with anonymized transactions and so on. So and that's the point on the challenge of data privacy and data control that you were mentioning. In order to do so, what we do is, well, we have 4 pillars. I mean, the first one would be the communication with the clients. All the UX and terms and conditions should be very easy to understand, understandable for everyone, and all the screens need to be self-explanatory. And also giving the user the control. I mean, the control of the type of decision they are doing and the different opt-outs or opt-in they need to do in all the customer journey, and the different privacy and access to different features they need with the different levels of data sharing he's doing. Apart from that, that would be the client-facing part. We also have our internal part, which would be first of all, a robust data protection with security and encryption and different international standards there. Also compliance, obviously, with all GDPR and other requirements. And as I mentioned, doing all the anonymization of all the transaction and using also differential privacy techniques in order to ensure the complete anonymization of the transactions we are sharing with different partners. And the last one, and very important, will be ethics on the use of data, with training for all the team with this type of use cases, understanding that, and also with the process, giving the control of a committee, depending directly to the board of each new use case of data sharing we are implementing at the group.
Thank you. Sounds like a lot of challenge, a lot of regulation, certainly around data sharing. And it's an absolute minefield out there, so I'm impressed that you've navigated it. And I think there'll be a few people who will ask you about how you've really gone about doing that shortly, I'm sure. But coming to you, Jaime, the challenges that you've faced while growing an international business, but here in Spain, in the Spanish ecosystem, what are the challenges that you've really faced, and how have you overcome them towards growth, building a fintech?
So I'm a strange beast myself, because I'm running a UK company from Spain, but this UK company acquired a startup I founded in Spain, and we merged. So I've seen the evolution of the growth of a Spanish and a UK company at the same time. So I can compare both ecosystems. And I have to admit, in Spain, we are lucky. We have, I think the fintech ecosystem is very powerful. We have any kind of solution provider or players in different aspects of business very well and ready to help. However, the ecosystem as such, as a global, I believe, is a little bit lagging behind other markets in Europe and definitely the UK. On top of that, there's also the regulatory piece that when you found a startup and you try to grow it, if you're, especially in fintech, we're doing most of the times things which are a bit borderline, not because they are borderline ethically speaking, but because regulation has not maybe gotten that far yet. In the UK, the FCA, the Financial Conduct Authority, is, I understand it to be a bit closer to entrepreneurs than I find institutions here in Spain. So they facilitate, for example, in our space, earned wage access, which is access to salary real time as you earn it. In the UK, we've worked with the FCA hand in hand, ourselves and other players in the space, and we've written the code of practice for this industry. And maybe one day it gets regulated by the FCA, but it will be together with us. Here in Spain, things are a bit harder. When I started the company 5 years ago, Tips, we just had to make bets on everything because we didn't get any answer. So it was just like, okay, let's just do this and pray that we don't get hit with any kind of regulation, right? So that's probably the biggest difference I see growing a fintech here versus elsewhere. However, Spain is developing fast, and again, there's innovation, there's talent, there's money, but maybe the environment is not growing at the same speed.
So at the beginning, Adam asked you to put your hands up, but I just wonder if there are any policymakers or government officials in the room willing to put their hands up. No? Okay. If you know of one, then can you just let them know that we want to have a conversation with them? Absolutely. Okay, let's come back onto online. Zara, coming to you, you've grown revenue across many jurisdictions, and kind of navigating those diverse regulatory frameworks is a skill. But what strategies have you used or implemented to expand the marketplace, but also making sure that you are compliant?
Yeah. So the story of Revenue really started out with the regulation and the legal roadmap. While most companies focus on building the product, we quickly understood that doing revenue-based financing, the only way you're going to be able to impact as many entrepreneurs, but also to have the scale that would be interesting, is to be operating in a lot of European countries. And at the time, we're operating in or based in the Netherlands, which is a relatively small market. So instead of focusing on other things, our first and biggest investment was, not the biggest in total, but our first big investment was the legal analysis. So what we essentially did was do an entire roadmap of all of the European countries and what differences, nuances, and regulatory things that they had, to be able to understand them. We categorize them based on green countries, which are really easy to get into, or sorry, dark green countries, really easy to get into, green, orange, and then red, to be able to understand which ones do we want to take the risk for and how do we build that roadmap. There was a combination between which ones we decided to enter due to regulatory challenges, but also to how big the SaaS markets were there. Being in the Netherlands, we understood the market, but it was where everything started. We went into the Benelux, and then the first other country the first big international country that we expanded into was the UK. And then from there, we really had to choose what are the types of combinations we're able to make. Went into Germany, which is pretty easy. Relatively easy, but then had already a roadmap into what are important countries that you need licenses for, if you need to hire people, have an office there, being France, Italy, and unfortunately Spain, still not quite there. So that being said, we were able to scale from 1 into 16 European countries relatively quickly because we had that framework and the roadmap, and we already knew everything that we had to do in advance. From a technology perspective, once we had that research and that analysis, we built our legal rule engine, which is probably one of the most fundamental parts within Revenue. And it's essentially the contract that we close between a company and also an investor, and there's a standard form in it, and depending on which matches we're able to make, so being a company from Luxembourg and an investor from Luxembourg would not be able to get matched because there's a banking monopoly. So understanding the specific clauses and problems that one could or couldn't do has built our legal rule engine to then be able to expand.
Yeah, and I guess I never stop hearing about how homework has helped build a fintech, understanding the regulatory frameworks, all of the legal systems that you want to move into before moving into it. And I guess that's all about de-risking the next move, and I'm sure there's been a lot of that certainly on the panel. But also I think what we've heard is we can't do things without partnerships and doing things in tandem with other people, be it governments, private entities. So Mova, just coming to you, in terms of the collaboration that you've had or partnerships that you've created to grow, how's Helios done that in order to kind of amplify their voice, but amplify the positive change in the financial sector?
Yes, sure. Yes, I think we believe our impact could be amplified when we join our forces with other partner. So it could be powerful to make partnerships with impactful companies that share our values of sustainability. And it could allow to offer other kind of products. So for example, today we have two kind of main partnership. The first one is a product partnership. So we are able to offer an investment product, so life insurance, called life insurance in France. So investment product dedicated to sustainable finance. And we work with another fintech to propose this product. We have chosen to partner with Goodvest, which is a French fintech, and a player recognized for its rigorous responsible methodology in order to expand finally our range of products and offer customers new investment opportunities, because our main catalog of products is a current account, joint account. We offer a freelance account or saving accounts, and this kind of partnership allows us to offer investment products. And maybe the second kind of partnership is a little bit different. We have created a sustainable cashback program in-house. So the program constitutes today the largest community of eco-responsible businesses in France. And so more than 100 companies, sustainable companies in France in all sectors. So if you want to organize your next trip, if you want to buy a new bicycle, etc. So you have all kinds of companies, and it allows the consumer to discover and support local and committed businesses while benefiting from a discount, so 6% discount on each purchase with Helios credit card. So this is the kind of partnership where we are able to form partnership with companies that share the same values as us, and we have a lot of synergies. All of our customers are finally really close because they want the same thing. Shows an impact, a sustainable company, and it's good for the business because we are able to propose new kind of products, so sustainable cashback, and we are able to talk to our maybe next customers who are with the other partners. So for the customer, we are able to help them to identify what kind of product or what kind of alternative you can have if you want to buy eco-responsible products or services, and we offer discounts because we know impact products are often more expensive than the other. So I think the success of the ecological transition relies on the emergence of a new type of business, and these companies like Helios, it's important to collaborate rather to compete and propose a new development, innovative, responsible model.
Yeah, absolutely. I absolutely love the idea of kind of differentiating between partnerships and type of partnerships, but also learning from them and then putting that back into the roadmap, especially from the community as well. I hear so many valuable insights come from people's communities, and I also hear that the next customers come through the community, which is amazing to hear. I think, and also I guess one of the reasons I'm sat up here is because we partner with a load of people that can support us, like Remote, like Startup Network Europe. So just being in front of your customer, it comes through some amazing partnerships. Right, a meaty topic that I'm going to open up is, and we touched on it in the previous panel, and that's AI and machine learning. Us at Zendesk, we partnered with OpenAI back in 2022. We understand the importance of AI and utilizing it and harnessing it to give a better customer experience. We've recently acquired 3 separate businesses that also operate in this space. But for you and for everybody on the panel, what does your company leverage, or how does your company leverage these technologies to keep you future-proof? And also, more to the point and more to my heart, how do you use them to deliver amazing customer experience?
So I'll break the ice with this one because we just launched a financial assistant based on AI. We've been the first wage access provider in the UK for sure, and in the rest of Europe probably. So, and we're leveraging. I mean, it's just great, right? It allows you to do so many things. In our case, we're dealing with employees who are financially stressed, who have a degree of financial education. There was, I have very bad memory, but there was on national TV recently in Spain, people discussing the level of financial literacy that the average Spaniard has, which is like in any other market. We are not worse than any other, but financial literacy amongst population is so bad. So most of the financial stress also comes from bad financial decisions that people make when they go out to deal with financial services. So what we're trying to do, we have a great financial education platform, but with this AI tool, we're seeing great adoption. We're just getting people to ask questions that otherwise they wouldn't ask anyone. They would just kind of go and do something. And they ask us questions like, if a loan has whatever interest rate and I get this commission here and there, what should I do? Which is very basic. Or what happens if I finance my purchase with a credit card in 3 months or whatever? So it's super simple day-to-day questions that people have, and if they don't have access to information, then they make decisions and then they get kind of financially trapped. So AI we're using for that purpose in the case of Hasty.
As I have the mic, I will go also to this question. On the generative AI question, we are testing right now an assistant for all the different customer journeys at the Fintonic app. So we are using it right now, but we are a bit late. But we are testing it at the moment. And on machine learning, all the topic I mentioned previously on the credit scoring, as you may know, the traditional credit scores are rule-based. I mean, banks or credit score traditionally are just if the income is greater than 2K, it's an okay or something, or things like that, obviously with plenty of rules. But our credit score is based on machine learning, and this allows us to give credit to people that traditionally would be excluded for other credit score, more with different type of relationship with their employer and these type of things, and these are helping us to be more sustainable and to give access to other people.
Yep, happy to go unless like Maeva or Zara, you wanna add something? No.
Yes. So AI and machine learning has really been at the core of our business from day one, because the entire concept is being able to fund companies based on their data, which means that we get a lot of financial data in from a lot of different companies based in different countries. So the first thing the 3 data sources that we analyze and focus on are subscription managers, which are pretty easy to understand and they're not very complicated. Accounting, which is really tricky because if you're a clever accountant, you can really put things in different places and make it seem to be better than it is. But most importantly, accounting is not really standardized in Europe. So every country, every accountant could have a different structure for that. And then third one is bank accounts. What we do is take those data sets and cross-reference them. So the first piece of AI that we built was to build our own synthetic P&L and being able to understand, okay, from what we get, how is that comparable, and try to categorize them and standardize them. And the second biggest piece is around the enriching of the banking transactions. And last year we acquired a company named Cake who specialize in enriching banking transactions, because when you pull banking transactions from open banking, the lines that you get are pretty hard to decipher. So being able to categorize them, standardize them, but also understand what they are has been a very big part of our analysis. So
yeah, happy to go. So I think we've talked a lot about the impact it has on revenue and on things that are extremely customer facing. Maybe I'll share a little bit of a different perspective regarding like internal use. For us, it's really been a multiplicator effect. So like every single person is highly encouraged to use AI, not so much to replace his job, but to multiply the output by 1.2, 1.3, 1.4, what they used to do before, right? An obvious use is in tech, right? Which typically you have a process called PR, like peer review, where every single developer needs to get another developer review their code and then push it to production. Well, guess what? If you have in a copilot, if you have someone that is not a coworker that can review it and then you send it to your coworker, you reduce basically the review time by the coworker by something like 80 to 90%, because most of the mistakes have been already picked up, right? And that's something that is increasing the output, increasing the amount of features you can ship, of product you can eventually do with the same resource, right? So that's just one example. Another example is content, right? So I think most companies would do some sort of content, so either on the publications, in marketing overall. This is like another great use of AI. It's pretty obvious. Another one is on overall the sales machines. There's extremely like difficult and manual work that sometimes is done on the prospecting part, for instance. This is something that is very easy to automate using AI in terms of mapping your potential clients, extracting some of the information about them, trying to get to the decision makers. So like all of that can be multiplied, can be enabled to basically be significantly more efficient.
Anything to add, Maeva?
Yes, today we don't really use the real AI, but we are working with AI on to help our customer support with some of the first level of chat. But the real subject for us will be the fraud management, using AI to help identify fraud patterns, because it's always the same kind of pattern, but fraudsters are using a lot of creativity to have a new kind of fraud pattern. So it could be interesting to be helped by AI. And the third point we are working on today is money management tools. So we want to develop tools to support customers to help them with their expenses, managing their finance, and have a view to be able to say, okay, you have spent X euros on this kind of on this sector, and you are not able to, you won't have enough money at the end of the month because you have recurring spend, etc. So we are working on the free kind of tools.
Amazing. And I do hope that you're using Zendesk AI for your chat, Maeva. If not, we'll talk after. I think absolutely there's some amazing uses for AI there. You've got financial literacy, education, large data sets, and getting the value from what could have taken ages to actually sort through, but also day-to-day efficiencies within your team. And I think just to close this out, the more we harness AI and understand it, the better we will become at growing and scaling fintech organizations across the world, not just in Spain, but all over the world. So I think that just brings me to say, before I get the hook, thank you so much, Jaime, Iker, Benoit, Arturo, Meva, and Zara for joining us online. Thank you so much. Give them a round of applause.
Brilliant. Jeremy, what a great moderator. So, folks, next up we have our crypto panel to end the event with. I was just Googling Bitcoin price, and the peak of Bitcoin was actually a month and a half ago, so crypto is doing very well right now. For people in the in-person audience, have you invested in crypto? Have you not? Okay, so it's quite divided, quite 50-50. Well, now we have a very good panel. Henrik from Finoa, are you here? Great, thank you. And Konstantin from Nebius, thank you. And Martina will be joining us online. So we'll give her a clap too. Great. No, exciting times, really, with crypto. So I suppose, Henrik, we can begin with you. You are the co-founder and co-CEO, very interesting position, of Finoa, which is a regulated custodian for crypto assets, servicing institutional investors with custody and staking. So question for you is, right now in the crypto world, what trends do you observe in the demand for crypto assets and custodial services among institutional investors?
Thank you. Very nice to be here. So yeah, we are Finoa. We are based out of Berlin in Germany, serving institutional clients in safeguarding their crypto assets, growing their crypto assets, what's called a custodian or qualified custodian in the crypto world. And that means we are regulated by the German Financial Supervisory Authority, and yeah, serving customers from the venture capital space, family offices, any fund structures across the globe in safeguarding their assets and growing such. We're the largest one, or largest custodian in the European Union. And when you say, yeah, what are the trends? I mean, crypto, it's often hard to say because it's so fast-paced. Trends are changing very quickly, so I try to be not so deep into the tech trends, but rather a bit higher on the requirements that we see from the institutional space when they work with providers, helping them to manage their crypto. The custody play in crypto is very different to that in the traditional financial system. And the traditional financial system, you have global custodians. It's a very consolidated market. I would say there's basically 3 players in the world that consolidate everything. It's BNP, it's State Street, and it's Bank of New York Mellon, right? Those are basically the big players. Crypto changes the entire tech stack of the game, right? Like I always like to say, crypto turns code into money and money into code, right? And that means whatever the code protects, and I mean, I've seen that you all, or a lot of you have already tried investing in crypto. Second question that I would have been interested in, are you self-custodying your crypto? So do you have a private key? Maybe raise your hands if you are managing the assets yourself. Okay, so what you know then is that this private key is the absolute nucleus, right? Whatever you do, in the moment that private key goes to someone else, the assets are gone, right? And so basically we safeguard such and do that so that you don't have to take care of it at a large scale. And trends that we see, I mean, of course, you probably heard about the Bitcoin ETF. The market in institutional custody has sophisticated over the last 2 years with an incredible acceleration. And to some degree, the FTX disaster helped with that, right? Of course, it was for crypto itself, it was disastrous, and for the image and whatnot. But for us as regulated players, it obviously helped a lot because suddenly the market understood, well, does make a lot of sense to work with trusted counterparties that are regulated and operating in trusted jurisdictions. So there has been a lot of movement from not regulated environments into regulated environments. That's more on the broader level. On the product level, and I mean, obviously, a lot of you, if you did invest in crypto, you probably have touched Bitcoin. But Bitcoin is also, what is it now, almost 14 years old. So it's kind of within crypto, it's more or less an old technology, I would almost say. I mean, of course, in the broader scope, it's still very nascent. So crypto has evolved a lot, you know, and the kind of requirements that we see that our customers need us to serve them with have developed as such. For example, Bitcoin proof of work, a lot of criticism on energy consumption. Now you see a lot of proof of stake assets in the market. Ethereum just moved to that, for example. We saw that early and incorporated our own staking provider, now managing several billion in assets under custody in US dollars, because we saw that is the need of a custodian to serve staking as a use case as well. So yeah, I think regulation, product trends, those are the ones that we have to really have a focus and an eye on, but it's a fast-paced changing environment, so we need to stay on our toes.
Thank you, appreciate it. And next up, Constantine. I believe you're based in Barcelona, correct? London, yes. The company's based between Barcelona and London. Perfect. Yeah, I knew, I wasn't sure about something. So you are co-founder and managing director of Nebius. I hope I'm pronouncing that correctly. Yes. Okay, never happens. And Nebius is empowering global digital nomads and marketplaces with seamless payments, crypto and card solutions. Obviously, millions of people are nomads, so huge target market. And my question for you is, collaboration is key in fintech. Look at here, the event we have today, of course. Everyone is coming together. So can you share examples of some of the most impactful partnerships or collaborations that Nebius has formed and how it has benefited you?
Thank you for the question. You're absolutely right. Fintech is built upon collaboration, and we recently did data sources review within our company, and we are using approximately 75 providers in order to deliver the products for our customers. And the solution providers which we're using can vary from charts which our customers are using, and the company is present here, and ranging to compliance, which relates to onboarding, customer transaction monitoring, and the ongoing screening of the customers. And also the companies which we use in order to facilitate the payment. Unlike Henrik, we are more using crypto, different use case, and in our case it's more about settlement, where we enable consumers and companies to use stable coins as a means of payment in the same way as SEPA and SEPA Instant. The collaboration result is we are basically looking at a Lego model where we are scouting the market for our customers based on the feedback which we receive from them and demand we see from them. We assemble the product together for them. We put on top the UX, which will make it easy for them to use and onboard. And we make sure that the value which customer derives from the combination of tools which we put together for them brings the value and solves the solution for them.
And next up is Martina. Hello. Martina, we met last week in London.
Correct. Yes, this amazing event, and this one is another amazing event. Thank you so much for organizing.
Yeah, we hosted the London AI conference in IBM, so a lot of talk about IBM, about AI and fintech, of course. So Martina, I mean, we've already met, but you are co-founder and CTO of Fiat Republic, a banking as a service platform offering a banking and payments API that lets crypto platforms easily embed and fiat flows for their end users in their internal treasury teams. And that's, for me, Martina, that's quite a mouthful. And my question for you is, what are the biggest current technological challenges that you see for fintech startups integrating traditional banking services with the cryptocurrency space?
I probably won't surprise anybody when I mention that traditional banking sits on very traditional systems. That means that we still need to deal with, let's say, batch processing, core banking system, something that comes from the 80s. And when you think about creating a company that is supposed to be a link in between both the old, so the traditional banking, and the new, the crypto companies, you need to appreciate the fact that you're building a bridge between a very old world that has very outdated tech, and you're trying to, sell it to customers, sell it to users that are very much used to very new tech. So that means that in your product, when you're creating your product, you need to very much think about how to make sure that your customers are not going to be impacted by the old, and you are able to, come up with solutions that make your product very fast and something that everybody wants to have. So in our case, an example of that is the creation of EagleNet, which is a possibility to send instant money instantly from one member to another member. When you think of, you said that it's quite a mouthful to explain what Fiat Republic does, but you can think of us as a two-sided network. On one side, we have the different banking providers. On another side, we have our members, which are crypto companies. And we want to make sure that all members or crypto companies have proper access to banking. And historically speaking, it has been a challenge, more I would say on compliance front than the technological one, because from compliance perspective, banks are not necessarily eager to provide services to crypto companies. So with that, the problems that we need to solve is how to make sure that, the banking sector is more more inclined to provide services to crypto companies. On the other hand, you want to make sure that crypto is not perceived as something that only is dealing with, fraudulent transactions and so on and so forth. So there is a lot of education to be done. And that means that any product that has any chance of success in this space needs to be also compliance-based. And that's quite important. So it means that the processes within the company, it means that that certain quality of services being provided is to certain standards. So Fiat Republic, for instance, is the e-money regulated institution where we have e-money license in UK, in the Netherlands. That means that we care very much about compliance. That means that when we talk to our members, we encourage them to also take compliance very, very seriously. So you have from challenges, the core banking systems, the old tech from the standard, old institutions. You have the, transaction times, which are very, very big for the old systems. You also have the problem that crypto companies are historically not that regulated. And you have a regulated, banking world that would love to see regulation everywhere. And you also have the issue with data. So how do you make sure that you're able to share from one party to the other party? But I think all that is changing as we speak right now. So we have MiCA coming, we have certain regulation coming. And that means that we're going to see a lot of movement in the crypto space, especially at the bridge, kind of like at the link between the crypto and the traditional finance.
Yeah, thank you. And I'm going to stand up like this. It's easier. I feel like I'm talking to you. So Martina, I'd love to ask you and also the other panelists a final question to end this great event. How do you see AI and machine learning impacting the crypto space? And Martina, maybe we'll go with you first.
Of course. I think this is such a packed question, honestly, but I think there's going to be a huge impact. And one person mentioned already here that it's not only on the products being built, but it's on the internal processes within the companies. And I think that's very true. We're going to be able to focus more on building the great products for our customers, as opposed to, catering to the very, very easy tasks that we need to do anyways on a daily basis. So I think that's one aspect of how we're going to accelerate in the business, and that's going to impact definitely crypto space as well and traditional banking as well. But also we're going to be able to perhaps finally include more AI in the products themselves, because especially in the traditional banking, there has been a lot of fear in terms of new technology, in terms of has it been tested, is it production ready? So I feel that right now we are approaching these times that AI is really production ready. So we are ready to put some systems in production and really use them. And that is something that is very exciting. So I'm very much looking forward to that.
Yeah, thank you. And Henrik and Konstantin, would you like to touch on that? Great, go here.
Thank you. In our case, AI is already a part of everyday life, and for each transaction, we are able to risk score where the funds are coming from or where they're going to. And the AI is providing us with the information which allows us to remain compliant and know exactly how and where our customers are receiving or sending funds to. So, and this is already happening today. Second use case, which we already experience now, is customer service. And the first line of support in our company is done by AI. We've calculated that it's equivalent of 7 full-time employees of the amount of work the AI is doing for us this month already. So it is there, it is being used, and we're looking forward to expanding the use of it for both benefit of our customers and compliance.
Yeah, I don't want to repeat what we already heard from Martina and Konstantin, but maybe one hot take a bit in general about crypto and AI is that I have a good feeling that AI and crypto might actually be one of the killer use cases for crypto. Because, I mean, you've all seen now the wave of fake content, fake videos, hard to find out what is actually true, what you see. That might, in some degree, also happen to us fintechs when we KYC customers. How do we really make sure that this user that is trying to onboard or trying to re-access an account where the account was lost or supposedly lost, how do we make sure that this is a real user and not a fake identity? And I think there, with the immutable state, with on-chain signatures, there I see a lot of very promising innovation where blockchain finally finds, let's say, a universal killer use case that we will then also see useful in the fintech space, but actually with crypto and blockchain as a core technology behind it.
Well, guys, let's end it there. So Martina, thank you so much. Gentlemen, thank you so much. And the audience, thank you so much. So I can barely see at the moment, there's light in my eyes, but I want to say thank you as well to the online audience. Hundreds of people today, I really appreciate it. And yeah, let's do more of these events. Thank you so much, everyone.